Today we're going to talk about the solo 401k, what it is, who qualifies for it, so you can have a basic understanding of these plans and if it's something you should look into. Now first off, what is it and who qualifies for one of these? Well, if you're an independent contractor or you got 1099 income, you're self-employed, you're a solopreneur, freelancer, you have a side hustle that's pretty profitable, any of those situations, you can qualify for a solo 401k. The only kicker is you cannot have any full-time W-2 employees. So it's simply made for self-employed business owners. Now, what are the contribution limits to these plans? For 2021, just like a 401k that's at a major company, the limits are the same. So for 2021, the limit is $58,000 to contribute into one of these plans, which consists of employee and employer contributions. Now, if you're over age 65, you can add another $6,500 onto this limit that we're talking about. In that $58,000 that I told you about, that consists, like I said, of employee, which is $19,500 plus $6,500 if you're over age 50. And then the employer contribution, which is another $38,500. So $19,500 plus $38,500 gets you up to that total limit. And the nice thing is, since you're self-employed, you get to make employee and employer contributions, which is one of the main benefits of these plans. So how do you calculate this employee and employer contribution limit? Well, the employee limit is pretty simple. You can contribute up to 100% of your earned net compensation. And for the employer side of things, it becomes a little more complicated and depends how your business is actually set up. So if you're an S corporation or an LLC that files as an S corp, you can contribute up to 25% of your net W-2 salary. If you're an LLC or a sole proprietor, then you can make contributions up to 20% of your net earnings. When is the deadline to establish one of these plans? And what is the deadline to make your contributions? Now, thanks to the Secure Act, the deadline to establish a solo 401k plan was changed. So for 2020 and going forward, you actually have until the business or tax deadline, including extensions, to establish a solo 401k plan. So that's a really big benefit going forward, and it gives you time to determine if one of these plans is right for you and your business based on some history of your earned income. Now, the contribution deadline, if your plan has already been established, so if you've established your plan by December 31st, you have until the tax deadline or business tax deadline, including extensions, to make employee plus employer contributions to the plan, which is also a nice benefit because it gives you some time to make contributions. I would say that if you are a S Corp, you do pay yourself a reasonable salary and consider W-2. So if that's the case, make sure that you do get it into your payroll by December 31st that you're going to make that contribution. That way all your reporting and everything lines up. So that's it. That's the basics of a solo 401k plan. In the next video, I'm going to cover the benefits and why I like the solo 401k plan. If you want to read the full blog post that goes into more detail, click the blog post link in the comments below. Hope that was helpful.